All right, today we're diving into a really fascinating puzzle playing out in the market. It's all about a company called RZLV, where there is just this massive disconnect between how Wall Street sees it and the absolutely wild, multi-billion-dollar vision its CEO is putting out there.
So, you've got two completely different stories playing out here. On one side, you've got the market's take, which is, cautious, maybe even a little skeptical. But on the other side, you have the company's vision, and they're aiming for nothing short of total domination. This clash is exactly what we're going to unpack. So what's the market's take? Well, it's this. Right now, RZLV is just a tech stock trading for about $2.50. To Wall Street, it's pretty much just another name on a long list. But that price only tells one side of the story.
And then you have this quote from the CEO, Daniel Wagner, which tells a totally different story. Look, he's not just talking about a little bit of growth here. He's predicting that in just a couple of years, his company's tech will be basically mandatory for the biggest retailers on the planet. I mean, talk about setting the stakes high. So the big question is, how on earth can a small company even dream of pulling this off? And that brings us to the first big idea from the analysis, the regulatory moat. This is supposedly RZLV's secret weapon.
And yeah, this is the million-dollar question, isn't it? You've got absolute giants like Microsoft and Google throwing billions and billions of dollars at AI. How can a little company like RZLV even stand the ring? Well, the key isn't to try and outspend them. It's to outsmart them by taking a road they physically can't follow easily.
And they do that with this concept right here, the regulatory moat. It's a brilliant idea, really. Think of it like building a fortress, but instead of stone walls, you're building it out of complex rules and regulations. It creates a barrier that is just a nightmare for big, slow-moving companies to get around.
The specific barrier we're talking about is the EU AI Act, which the source material literally calls a minefield for big tech. It's bringing in all these strict new rules about where data can be stored, how it's governed, and making sure algorithms aren't biased. For a global company using a one-size-fits-all AI, the legal risk here is absolutely massive.
And this slide just lays out the strategic difference perfectly. Look at the left. That's big tech trying to slap patches on their massive, clunky global systems to try and fit these local rules. It's a mess. And then you have RZLV on the right, who built their entire system from day one with these rules already hardwired in.
And this isn't just some marketing spin. I mean, listen to their chief revenue officer. The whole system was designed for this specific problem. It's not a feature they added later. It's the very foundation of what they do. And that turns a huge headache and risk for their competitors into a massive advantage for RZLV.
But believe it or not, that regulatory moat is just step one. The vision goes way beyond just AI compliance. And that leads us to the second piece of the puzzle, the Web3 catalyst. This is where the plan gets really ambitious. So to get this Web3 angle, you have to understand the walled garden problem. Right now, if you're a retailer and you use a big tech platform, you are essentially handing over the keys to your most valuable asset, your customer data. You get trapped inside their system and you lose control. RZLV's strategy is a direct assault on that entire model. It's this really clever four-step plan. Step 1, provide the basic AI. Step 2, guarantee it's compliant. That's the moat we just talked about. Step 3 is where it gets interesting. They use decentralized tech to give data ownership back to the retailer. And the final move, the checkmate? They leverage that position to become the actual payment system for the whole transaction.
And just look at the payoff for retailers here. It's a total game changer. They get to actually own their own data again. They break out of those walled gardens. And for RZLV, this creates a clear path to go from being a software company to being a full-blown fintech company, maybe even using crypto for payment someday. Okay, so we have this massive, incredible, long-term story. But now we have to bring it all back down to earth. Back to today. And this is what the source calls the do-or-die launchpad. It's where that huge vision smacks right into the hard reality of the daily stock chart.
Now, the technical analysis really just zeroes in on a few critical numbers you need to watch. 255 is the floor. That's where sellers tried to push the price down and failed. But the real line in the sand is 263. That's the VWAP. You can just think of it as the average price where the big money has their skin in the game. If the buyers can push it past that, the next stops are 270 and 272.
And there's this subtle little clue hiding under the surface here in the charts. See, even as the price was dropping, this key momentum indicator, it's called the MACD, it started to curl upwards. That's often a classic sign that the sellers are just running out of steam and the power might be about to shift.
So what this all boils down to is basically two potential outcomes. Scenario A, the stock just kind of chops around between that floor and that trigger price. Boring. But scenario B is the breakout. If there's a strong move above 263, it could trap anyone betting against the stock, forcing them to buy back their shares and rocketing the price higher.
All right, let's pull all of this together for the final verdict. We've seen the massive, multi-year fundamental vision. We've dug into the nitty-gritty of the immediate stock chart setup. Now it's time to stitch these two threads together and see what the whole picture looks like.
So here is the complete thesis, just as the analysis lays it out. You've got the fundamentals, the CEO's huge vision, that powerful regulatory moat, all pointing to massive long-term potential. Then you've got the technicals, which seem to be suggesting that right now could be a discount entry point. It's a setup that appears to have a very attractive risk versus reward profile.
And when you get right down to it, the analysis concludes that there are two massive forces that could make RZLV's solution practically inevitable for big retailers. First, the pressure to just keep up with their competitors, and second, the desperate need for regulatory certainty. It's a pretty powerful 1-2 punch.
And all of that leaves us with this one final, really provocative question to think about. If the absolute biggest retailers in the world, the Walmarts, the Targets, are forced to adopt this kind of tech just to stay alive, what are the ripple effects? What does that mean for every other business in that entire ecosystem? That right there is the multi-billion-dollar question at the very heart of this story.